All right, so welcome to another video. Today, what we're going to do is we're going to go ahead and take a look at IBM. We're going to go ahead and see what's going on happening with the stock itself. I do want to remind you, none of these are recommendations to buy, sell, or trade anything, just my opinion. You can also check some things out that I have available on our Discord channel. Just see some of the charts here that I post periodically, as well as some announcements. And that way you can get some technical analysis there as well. It's absolutely free, and there's a link in the description, so check that out. And of course, check out the website at tradersfly.com where you can sign up for freebies and some live classes that I have when it comes to trading options, portfolio constructions, swing trading, and much more. All right, so let's get started here with IBM. I want to just show you just some of the things going on here with the price action, just do a quick little technical analysis with it. So right now, the Q1 earnings, it beat consensus on the top and bottom line. So that all sounds great. I mean, they call it Big Blue back in the day. So it's just one of those old dogs that's still it hasn't been doing very well, but by now it's kind of all of the bad news is baked in. So you could say, okay, well, now we're getting a little more stable. It's not as bad or nasty as like take a look at this Netflix chart where we're down almost 36%. And then you take a look at IBM, which is not even a hot stock at all, and you're up 6%. So that's the funny part behind it is this stock already, even a day or so before, look, the earnings were already, the people are already buying into the stock. There's already volume coming into it. They knew something, right? So whereas with Netflix, if you take a look, you just got a big drawdown. It's very nasty and it's not good. So when we look at IBM here and you just take a look at the problems you've had, I mean, this stock since probably 2013 has just been in a downward trend. So just take a look right here. We've just been going down. So there's a lot of resistance, boom, 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 boom. But what you could say is it's building for a longer term triangle pattern. So here's kind of the support right here. This has been a really critical support level. And that support's been from 2016. So this is almost a 5-year support thing. So imagine being in the stock and it's like, man, it's not doing anything. Or you're like invested in it, or you're working for the company and you're getting retirement stuff in stocks. And it's like the stock's not doing anything, right? So you're just basically going sideways and it's nothing. But from an earnings perspective, like this week, today, the stock is popping quite a bit. You're up like 6%. This is when you are like, oh, I feel good that I'm invested in a stock like this rather than Netflix. And then you're like, thank God. So now you start like partying all around it saying, hey, this is a good thing. So even though you've had some tough times with IBM, the stock is building some positive momentum. And I'd say look at the weekly and monthly charts on this stock. You're not in a very, very bad or nasty situation. I mean, yeah, if you look at the 90s, the stock had a huge explosion. This is when this thing was prime and butter. But right now we've had some digestion and we had some good move up. And again, you're kind of in this digestion period where the stock is pulling back, compressing, and then you're looking for maybe more upside there. So overall, when you start looking at this stock and you look at the trajectory, if I kind of just look at what we're doing, just kind of looking at the ranges, you can see we're kind of moving in this path. And I think you're at the lower end right now, actually, if you're looking at this channel. So yeah, you do have some outliers over here, where the stock did dip quite a bit here in the 90s. But overall, the stock is still trending to the upside. It's just that the periods and the length is just very long. This is like from the 60s. I mean, you look at this from the 60s and you look at kind of, the astronaut and moon related things when they were doing the IBM machines to launch space programs and all that stuff, the computers running all of the space programs. This stock has had some long-term sustainability. So I don't think the stock is going anywhere, or the company, it's not going to flop. But the problem is the growth. It's difficult to turn a big Titanic around, or a boat, to change the business. What they could do is acquire different things, but they've already got a business system in place, right? So it's difficult to do that. But hey, maybe it's just making money consistently and doing its own kind of thing. That's fine. But from a stock perspective, it's not a hot or sexy investment. That's okay. But what you can see is right now we've got like this, call it 6-7 years of descending growth. And now you're building this compression here, and that compression could lead it higher. It could also lead it a bit lower. But from this quarter right now, the earnings look good. The volume's actually starting to pick up. So this is good. So from a shorter term perspective, you know, you're looking, hey, we're kind of moving in this path and that looks good. I've got some resistance around 140, so that'll be a little bit of a trouble because the stock will have some rejection around that zone maybe. And you also have the gap right here, which is also part of that resistance. So there's the gap to watch out for. That was in September, October. And, but if we can keep breaking through this 140 level, you'll get into that longer term descending trend line. And if we can break that, that's when you'll see the next range of growth coming in from the stock. So that's what I would look for, is just look for, hey, can we break this 140? Okay. If you can, you've got another little bit of a spot where you need to watch out for to break through that. And if that can break, then that will look a lot better. Otherwise, from a kind of a shorter to medium term perspective, you are still kind of heading in this upward trend, but in the bigger term, you're compressing here. So you do have to be a little bit more mindful and careful, because from a longer term, you're still kind of in this compression that's happening over the years, and it's a slower mover for sure. But definitely much better being in a stock like this today than something like a Netflix, because you're definitely toast on that one. Whereas with IBM, you're like, oh, it's going up. Yeah, that's good. That's okay. Even if it's not going sideways, it's still better than being down 36%. So anyway, I wanted to share that with you. It's, you know, the earnings report and all that look pretty pretty good here on the, what did they say on the conference call here? And then here is the earnings. 1.344 was the estimate, and the actual is 1.4. So they beat it by a little bit. And in this market condition, that's pretty good. So anyway, I wanted to share that with you. Thank you so much for joining me. Hope you enjoyed the video. Feel free to subscribe to the channel if you're brand new, or go and grab some of the freebies on the website by clicking the links right here on this page. Thanks again, and I will see you next time.